Ever wonder why some people's money seems to grow faster than others? The answer is compound interest. It's a simple but powerful financial tool that can help you build wealth over time. And today, we're breaking down exactly how it works and why starting now is so important. Let's start with the basics. What is compound interest? Compound interest is when you earn interest not only on the money you've saved, but also on the interest that's already been added to it. It's like a snowball rolling down a hill, getting bigger as it picks up more snow along the way. The longer your money is invested, the more it grows. Here's a simple example. Let's say you invest $1,000 at a 5% annual interest rate. After the first year, you earn $50 in interest. Now, in the second year, you're not just earning interest on your original $1,000. You're also earning interest on the $50 you earned in the first year. That's compound interest at work, and it keeps building year after year. But here's the key. The earlier you start, the more powerful compound interest becomes. Time is your best friend when it comes to growing your money. Even small amounts invested early can grow into something significant over time. If you wait, you lose those precious years of compounding. To show you how powerful this can be, imagine two people. Person A starts investing $100 a month at age 25 and stops after 10 years, never adding another dime. Person B starts investing the same $100 a month, but waits until age 35 and keeps contributing for 30 years. Who ends up with more money? It's person A, thanks to starting earlier and letting compound interest do its magic. But compound interest doesn't only work for savings, it can also work against you with debt. If you have unpaid credit card balances or loans, compound interest can quickly grow the amount you owe. The interest adds up on the balance, and then you start paying interest on the interest, making it harder to pay off. This is why understanding compound interest is so important, not just for investing, but for managing debt. So how can you make compound interest work for you? Step 1. Start investing as early as possible, even if it's just a small amount. The sooner you start, the more time your money has to grow. Whether it's in a retirement account, a savings account, or even a basic investment account, get started now. Step 2. Pay attention to interest rates. When saving or investing, look for the highest interest rates you can get. But when it comes to debt, focus on paying down high interest balances quickly. Compound interest can grow your savings, but it can also grow your debt if you're not careful. Step 3. Be consistent. Compound interest is a long-term game. It's not about quick wins. The more consistently you save or invest, the more powerful the effect of compound interest over time. Finally, don't wait. Every day you delay is another missed opportunity for compound interest to work in your favor. Whether you're building savings or tackling debt, understanding how compound interest works can make a huge difference in your financial future. Found this helpful? Don't forget to like this video, subscribe to the channel for more personal finance tips, and hit the notification bell so you never miss out on the next strategy to build your wealth. Share this with anyone who could use a little help understanding compound interest. It could change their financial future. Start today and let compound interest work for you, not against you.